Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So this was the last day of August, a month that had a lot of volatility, a month that you're going to read about all the statistics about the worst month since whenever. I don't have them all in front of me. I just got done trading and I don't have a statistical team working behind me. All I know is what the charts look like, when things broke and how you could have got out of the way, how you could have pressed short, how you could have maybe, looked for buying in the hole and playing the range. And as of today, the market's not really telling you what it wants to do next. All we know is we had a very hard break in the S&P when we broke below 2040. It went further and faster than you would have thought, but didn't really matter if you were out of the way, and it paid you handsomely if you were short thinking it was going to go in that direction, not knowing how deep it would go, but you didn't have a chance to cover. It just did it quickly. And then if you mapped out levels to be long, you caught a really nice trade last week, and now we're trying to figure out, can we hold higher and digest and continue up, or was that the bounce to then roll back lower? You look here at the chart of the spiders in the weekly. I like to give you the big picture first. On the big picture, we talk about trends and when they change, and ever since this low back here in 2012, we've been following this trend, and this trend finally broke. And what coordinated to the trend? That channel that we were maneuvering for a good, 7 months. So when this channel finally broke to the downside, you didn't have to forecast this whole thing happening. Okay, you had to wait, and you could have jumped on, because if you thought that we were going to get a huge break, big correction here, you could have gotten stopped out and lost your shirt. You could have thought it was going to happen here, added to it, and went higher, whatever, et cetera, et cetera. All I know is here you broke the 2040, the 204. Then you had a move down to test last October lows, and we snapped back up. And where are we right now? Pretty much, back into a pretty sizable resistance with really big resistance over that. So a hard spot to figure out what's next. So when you're in a hard spot, you might as well have risk a little bit lower. So with that being said, let's micro analyze things a little bit. Okay, so here is obviously you can see now the range that we broke below. This morning, I wrote, okay, let's see how we hold up. We have support at Friday's low of, what is that? That is 197.92. We briefly went below it, okay, and put a new low in at 197. So now what you do is you take out this bar here, because the range is giving us some more data. And hold on, I'm trying to still learn my new e-signal here. Okay, look at that. And whoops, and that's what we have now. So tomorrow we'll see what is next. We have a bull flag forming, or not even a bull flag, a flag here trying to show some commitment. But we could roll lower. So as of right now, if just say we open up, we're flat tomorrow, I would say use 197 as micro support, a break and close below this, and you could see a move down to test bigger support, which is closer to 195-ish. So this would be your next support level. This is that gap from Thursday, just say 195.5 to 194.5. So you have support 1 and then your support 2 area. And all the way back from here to there, it wouldn't be so crazy to retrace that. Okay, but if we were to hold here, okay, and just say everyone playing short for a move back to the lows, and you go sideways here and break above, that would create a squeeze. So those flat looking for that type of move too, are trying to see whether or not they have to buy in here for a move higher, or wait till we see this area, or who knows, maybe we just roll lower. At this point, still below most moving averages, trying to hang out in here. I don't think you have to be, big either way. There's been different movement. There's been different movement all year. All year when the S&P was in that range, you had rolling corrections in so many sectors that were down 10%, 15%, 20%. Trends that were in downtrends for, a year and a half, and then, then you get those counter trend moves. And people love to play counter trend moves because when you catch them, they're fast and furious. And if you're not caught in them during the whole down move and you're just trying to make money back, if you catch them right, there's a big percentage gains in there. And look at the move in the XLE. XLE just had its biggest, 3-day move of pretty much of the year. And at this point, what did it really do in actuality here? The XLE just came back and retested this spot. So as big as this move was, they're really not that big in the scheme of things. Okay, and this is your next big resistance going sideways, and all the moving averages are still caught up there. So if you happen to have gotten out of the XLE when it, we've talked about this pattern so many times, when it broke this head and shoulders pattern or broke the 200 there, a few different times this year you had a few moves, and this one was another one. So at this point, do I think you should just be shorting because it's heading into this resistance where it broke down from at the last pivot? Some people probably short this now right here, but also here's your gap. Okay, the next day, did it fill it? Did it fail? No. So that was your gap to trade against. And if you're trailing it, you had a nice gain, a 3-day gain. You made some cash flow, counter trend trade, and now you'll see what's next. Okay, it started lower today, went from red to green. So if you were in it for that, congratulations. And here you are. This thing wanted to continue. The next spot is 70, but I would think that we retrace a little bit, and then you want to see it hold higher. The OAH is also, what did that do? OAH has actually penetrated that prior support. So just if you're blindly shorting the XLE because you think it's coming up to retest prior support that turns into resistance, these guys who started shorting the OAHs right here, they're probably trying to feel it out and say, "Woo, I might be in trouble here." Look where the XLE, look where the OAHs came from. OAHs at some point a year ago, August, was as high as 55, and all the moving averages are still higher. So with that being said, a lot of guys like to short broken sectors quickly, but if you do it, you could talk about it, and you could write about it, and you could rant about it, but if you start too quickly as a trader, you might be blown out of the water into that and then miss your opportunity. So as traders, you can have an idea, but you want to wait for the market to confirm it. As a writer out there that just talks about things, you could have been shorting this day, and you could say you're staying short until finally it has a down day and then say you're right. But anyway, at this point, 3 up days. If you played it on this gap up here, and you held it, congratulations. If you sold it because you thought it would pause here at resistance, big deal. You had a decent trade. No one thought that you'd have the biggest move in oil, the biggest 3-day move in three years. What could have given you a little bit of a signal? When it broke this downtrend. This was the first time since June or July that it got above the 8-day moving average. That's different, right? Was below it, controlled by it, popped above it. So if you were short oil, okay, this was your signal to cover, right? First time this trend, this minor trend, it wasn't a macro trend, it wasn't huge, but this descending channel, which we talk about all the time, resolved higher right here. Okay, so that at least could have got you neutral. If it got you long, even better. And if you stayed there for 2 days, great. If you were in there for 2 days and you said, I'm going to hold for a third, there you go. If you saw it open lower and said, I'm going to look for a red to green move, went from red through yesterday's high and squeezed again. And now, where is it approaching? This was a prior breakdown point. So probably a spot to sell or trim. And if you're looking at short oil, just be aware that oil has been fully annihilated. And it was actually, earlier in the summer, higher in the 50s and 60s. So if it wanted to really cause the most major pain trade out there, it could at some point fill this gap, which would take it back to 19. So again, if everyone out there says short oil, we're in deflation, we're going back to the lows everywhere, this is just a counter trend, feisty cat. Well, if you started shorting here, chances are you're not staying short through there. If you bought this and were covered here when it broke the descending channel, you just made yourself a nice move. And now we'll see, what type of commitment you have to it. So, that's some of that. As far as, the names that I'm a little bit more involved with and familiar with, you have the go-to names, which all are trying to flag. They all look like the spiders. They all look like the Qs that have all come a long way. But do they hold here and make another move and you want to catch a nice trade, or do they retrace down a little bit and you have to figure it out? Because there are guys trying to short this area, and if we roll down, they're going to make good money. And there are guys trying to figure out if they have to be long here because they're not pulling in, which was the story of the past few years. Apple today was a little tricky. First, made its higher high, okay, which I was long when it went green, had a nice trade. I didn't add on this higher high, but I also didn't sell into that. I thought maybe it would hold up. Not saying this is a red dog reversal here, but it did push through 1330 and then couldn't hold it, so that could have been at least take a tier off. It's now has an inside range here, so we'll see. Apple that led off the lows. It came into this descending channel. It could not break this, but obviously it wasn't as oversold as oil. But anyway, this has been a nice trading vehicle, much better than when it was in this channel. Okay, remember this channel, gap down after earnings, didn't fill the gap, bearish, broke below 123, lost a 200-day, and it's become a trade since. And now I guess we'll get some clues here with tech. If it could hold here and go sideways, tech will probably hang in. If this starts to roll down, okay, chances are we retrace lower. You could say the same thing for Netflix. Trying to hold in here, had a really big move. This is the lines I actually drew this morning. Came into the resistance there, reversed Friday, opened a little bit lower. Support one, which was 113, held and went as low as 113.76. Question is, does it stay in here? And then does the market get power, and does this resume its leadership? Or do we roll down a little bit and you can get a trade a little bit closer to a gap fill into this moving average, which is closer to 109. So that's what we're trying to figure out here. Okay, Google was definitely tricky. Google, that led the market up the day, that crazy day. You know, it was the first one or second one to go green besides Apple. Then remember, it made this little pivot trade here where it showed that it could get above last Monday, Tuesday's high, and filled this gap, which was a good sell spot. I don't know if you shorted it even better, but now you're 3 days down, still into support. It was tricky today. It did go green and then failed. Didn't fail, just sold off. So now we'll see. Does this 640 hold going sideways? So I think that'll be kind of important. If Google can't hold this spot right here and hold after pulling in almost, what is that, $30, chances are some of the other momentum names won't hold. So you look for, you look where the money's going, you look for the flows, you look for what things kind of similar are doing. Amazon was very tight and it kind of loosened up a little bit. And actually still hanging out there, this descending channel, controlling this, still tight. So see if that continues. Not the easiest trade in the world, but still hangs in there. Tesla was stronger earlier in the day and then kind of tailed into resistance, which is pretty much what all these things are doing. The market's not sure what's next, so why would it just break out and go? So all these stocks are failing into new descending channels. So the question is, where do they hold? This stock's holding better than other ones, but we shall see. So see what happens here into potential. I guess this would be support tomorrow, depending on how we open, and this would be support lower. But all in all these little descending channels, all these resistances that we just rallied back into are containing the moves. The bios were relatively weaker today, which definitely a little, I wouldn't say, yeah, I guess it's kind of concerning, but can't be too concerned considering the size of the move that you've seen, in the weekly charts here of the bios. So maybe just the money went into, where's the weekly, into the oil names. So go like this. So here is the trend. Okay, remember that head and shoulders top, came in, held lower. So at this point, it's still, this trend broke. This was a very strong trend going right into here with your 316 inflection point, came back up, retested it, turned down. On the daily chart, definitely doesn't seem like, it definitely seems like the trade has changed a little bit. Let's go to the daily chart. All right, there's the daily chart. Almost a red dog reversal. It tried to push up today. Actually, no, it did. The high here was 354.50, above 353, so it pushed above, couldn't hold, and then engulfed this 2-day range. So this looks a little bit weaker than some other sectors right now. But again, this has had a big move while energy corrected. So money does rotate, and as traders, you look for little complexion changes. The Russell also has been beaten down, but it played a little catch up last week, and then let's see what it did today. Just a rally back into resistance. Still below every moving average. It gave you a reflex type move up, came into some resistance. This was prior support, so this turns into resistance, pushed up a little bit. You still had another area which if it wanted to get to, maybe it still can. But overall, remember this breakout failure? That showed you distribution. Then it came to the 200-day and made a lower high. And then this is when it broke below the 200-day, and that's when you don't stay in stocks. Usually we're out when it breaks the 8 and 21-day, but if you're a little longer term and you think you have the pain tolerance or a bigger picture view, well, that was your out right there, and you could have saved yourself a move from 119 down to 105-ish. But anyway, not really showing you much. So I guess with the jobs report Friday and everyone talking about rates and liftoff, you want to see if the banks that got beaten down after the Fed minutes start acting better. So we talked about Goldman Sachs, see what it could do today. Hanging out, Goldman Sachs has got to stay above this to kind of keep some momentum there for the potential of higher prices. Also was upgraded today. Morgan Stanley looks similar, trying to hold up. But again, look at these names. They're all below the moving averages, well below the 200-day. Look at this outside day right here. That opened up and got sold. Opened up, sold. Below the 21-day there, broke below major support here. So now what's it trying to do? Reflex move, kind of retest here. So this trade's not that interesting. But that's what we have in this market right now, a not very interesting trade. Can we go into bigger resistance or do we roll back down? It's also the last, actually August is over, still a lot of people on vacation. I think last week might have been even less people because most schools start Tuesday, Wednesday, so everyone's back, but doesn't mean that people are trading the spot. You know, people wait and see, wait and see. And when guys are in wait and see mode, you could be in cash. You don't have to overtrade. It's very easy to overtrade the last few days. If you were short, you're like, oh, we're covering, we're going through 199, I got to cover. And, you know, and we didn't go through there, it fell. Then same way, if you were like, oh, we're going to break now 198, let's press, didn't get much. And the same way if you were trying to buy, saying, oh, I don't really want to buy, but this flag is going to continue fast. It almost reminds me of that 7-month range, but all it's been now is 3 days. So don't overdo it in this range, especially if you had a very good, week or two. We'll get more clarity. There'll be some direction, and we'll see when it happens. And that's what markets want to do now. They want to kind of either give you a false sense of security for the bulls, where we look like we're holding here and then we retrace lower, or make things seem out of play, get a quiet market, trap some shorts, and then we see those higher prices. But as of right now, it's only Monday, and I think we have a lot more action to see. I'll be here all week, and we'll try and dissect the action and figure it out as it goes. Have a great night, and I'll see you tomorrow. Have a good night.